Economic Forum's annual meeting here in Davos was themed on technology, the fourth industrial revolution. But the conversations here were all dominated by the China story, by falling crude oil prices and geopolitics. So we've got each one of those perspectives covered for you on the show. We speak with the Deputy Managing Director of the IMF, Zhu Min, to get you a sense of what the global economy looks like and how China is managing this economic transition. We also have a geopolitical expert, Ian Bremmer of Eurasia, to talk to you about what the world will look like in 2016, especially the Iran-Saudi Arabia face-off. On crude, the Executive Director of the International Energy Agency himself, Dr. Fatih Birol, and another very well-respected voice on energy, we've got Dan Yergin, the Vice Chairman of IHS, to tell you where crude prices are headed here on. China has been making the headlines almost every day through the course of 2015, an expectedly difficult shift that the Chinese economy is undergoing. How would you assess how the government and the central bank in China have handled the shift and the volatility that comes with it?
Well, China has experienced a historical transformation, which is converting its economy from very much investments, export-driven, to more service and also more consumption-driven growth model, which is very big change. I'll just give you a few examples. For example, you have to cut overcapacities in manufacturing. Right? There are steels and there are coal minings, there are cement, it's overcapacity. If you cut 20%, it's a huge job. Right? Meanwhile, in the real estate, it's a 1 billion square meter empty. So you have to do the destocking on the real estate, which is also not easy. Together, if you do these two things, you have to deleveraging on the corporate debt side. Now, this is a daunting task. But meanwhile, you have to support on the service sector and on the innovation side to support this growth. And the build on sustainable service growth model is not an easy thing, and it's a global challenge. So bring these two things together is really a big challenge for macro management. I think that's the whole issue. So the process can be bumpy. I think that's very important. But so far, we observe Chinese economy is really on the way to transform into the new model. We think the macro foundation still remain the same. So we see the growth is 6.3. Yes, it's lower than 6.9, but I think the quality is better because risk level is lower.
How far down the road are we in this transformation that China is attempting? So are we going to see at least a couple of more years of the kind of volatility and disturbance we saw in 2015? Because when China sneezes, the world catches a cold, it seems.
This is a medium-term project. They will not be able to finish for, say, 1 year or 2 years.
Much longer.
Because the investments account for roughly 43% of Chinese global GDP. If you're cutting 10 percentage points down to the 34, it will take another 5 to 7 years. So it's a long process. So managing this process is a macro challenge for Chinese authority, but also it's important for the whole world.
One of the issues that the IMF has also been speaking about over the last couple of years is the competitive currency devaluation process that we've seen. With the dollar getting stronger, the yuan now getting cheaper, where and how do you see countries managing this one big challenge?
Well, dollar getting stronger is clearly is the phenomenon we observe. And we've got to be very careful when the dollar getting stronger. In the past roughly 50 years, you always see the capital flows. And we all see associated with quite a crisis associated with, because when your dollar getting stronger, the corporate balance is deteriorating. Right? You have to pay more interest rates. And when exchange rates change, you also pay more. So there's pressures on also sovereign accounts as well. So I think that when dollar getting stronger, I think that that's pressures for the emerging market, particularly for the corporate debt side. The corporate debt in the emerging market roughly reaches $3 trillion now, which is quite concerning and a big number as well. So I think that is the first issue. The second issue is when you see the external shocks on those things like that, your first thing is you let exchange rates be flexible. So become the first shock absorber. So that means you should let exchange rates follow the market to move.
What would you identify as the top 3 challenges facing the global economy, the global financial system as well?
But the three challenges for the global economy is, number one, the growth is moderate or modest, and the potential growth is lower for the next 5 years. So the authority have to take action today to do the structural reform to boost the potential growth, number one. Number two, the financial market will continue to adjust. Why in the past few weeks financial markets are very much volatile? Because when interest rates increase, you expect to see the growth pick up. Otherwise, the market will adjust the valuation, right? Now, this time, the interest rates on the upside, the growth did not pick up as interest increase indicated. Now, these two things have to link to each other. So market just adjusts its valuation now. In the next 12 months, if the interest rate is still on upside, the growth is still not as strong as interest rate indicated, the market will continue to adjust. So market will be very volatile. Plus, the market have a structural liquidity illusion issue. As a liquidity tightening is really a concern. So we say market will be very volatile. So particularly the private sector need to prepare for the short term and the volatility in the financial sector. And the third issues, I would say, there's still a lot of political uncertainty around the geopolitical risk is the key issues, and the various across all different regions. Migration also a big concerns in the Europe, and even within some countries, and you see the different policies and the different arguments. Those political risks are unpredictable, right? So it's just a potential uncertainties. You don't know if it's come out, it will have impact on the market.
What do you make of Davos so far?
It's a little depressing. I mean, there's a lot of doom and gloom. It's not that surprising because it's the first time many of these people are seeing each other in the new year, and the headlines in the first 2 weeks of the year have been pretty lousy, whether it's, the oil price that's really taken a dive, or it's China and the markets, or it's Europe and the refugee crisis, or it's the U.S. elections. I mean, they haven't seen a lot of great headlines, and so as a consequence, everyone's coming here and sort of the fear's playing off of itself, and the markets, of course, not doing well as a consequence of that.
Now, how much of that do you buy into? What do you expect 2016 will really be about?
Look, I do worry about the geopolitical environment in 2016. I worry about what allows many of the oil-producing states in the Gulf to stay legitimate and stay stable. I worry about, sort of the impact of that on terrorism and the refugee crisis and the rest. But let's be clear. Europe is still Europe. It's not falling apart. It's not in revolution. The Brits, there is a risk that they're going to vote to leave, but more likely they're going to stay. And so, I mean, this is a challenging year. But the upside and the downside depends on where you're looking, where you're investing. It's actually a very differentiated and fragmented world. And I think the biggest risks in 2016 are the ones that we're setting up for the longer term. It's that we don't know what the U.S. and Europe stand for. And that really does undermine a lot of the values that the people that meet at Davos really support. The people here they love the free market, and they love globalization, they love liberal democracy, but they don't think their governments support that as much anymore, and that really does unnerve them. Okay, I'm going to pick on each one of those things, or at least a few of them, to get a bit more detail from you. First, let's talk a little bit about Europe's refugee crisis. This is not a test of the European Union. I mean, the last few years we were talking about what went on financially and economically in the southern part of the European Union, and said, oh, well, this might break up the euro. Right. So this is not going to break up the euro, and it's not going to break up the European Union. Or the Schengen zone? Well, that's different. It might be a test of Schengen, and we might well see that Europe will no longer be open and free, and that will have an economic impact. I think what we're seeing, this is a test of the European idea. The notion that Europe is not just about a currency, it's not just about a common market, but Europe is also about people that stand for something beyond that of their national flags, that of their national governments. And as we're seeing, when the going gets tough in Europe, that's not what's happening at all. They're falling back on Swedish identity and Swiss identities and Spanish identities and all of this. And that, of course, that's very depressing, very disheartening, but I wouldn't say it's the end of Europe. I mean, that's a very different story. Okay.
oil and what's going on in the Middle East, the Iran-Saudi face-off, now with Iran back in the oil markets, how that's going to exacerbate. What do you expect the outcomes will be?
Great news for Iran. They get to produce as much oil at $28 as they would like, and they can drive the price even lower, and they intend to do that. Look, this is a disaster for the Saudis. Everyone knew the Iran deal was much more problematic for the kingdom than it was for Israel or the Republicans in the United States, and they're escalating accordingly, because when you're Saudi right now, you don't know what's going to make your government stay in place. You can't write the big checks you used to, not just for the 25 million Saudi citizens, but even the 15,000 members of the royal family. They're not getting the big checks they used to get, right? So if you're Saudi Arabia, you need to get people excited about something. Beating up on Iran is a good thing to get excited about if you're Saudi. And clearly this fight is going to escalate. Clearly you're not going to have the ability to coordinate any sort of peace discussions that are meaningful on Syria. I think that Iraq, of course, as well, the violence that is escalating there, the expansion of ISIS, terrorism, of course, not just in the Middle East, but also increasingly reaching into Russia, reaching into Europe, even a place like Indonesia. The Middle East does metastasize as this conflict grows.
And the outcome of that is so difficult to pinpoint, but I'm still going to ask you that question. How much worse is it going to get?
Well, I mean, I kind of see the Middle East like climate change. There's no solution. You're not going to fix it. You just hope that you can contain it, and it's not going to get that much worse. I think that people have to understand this. Saudi Arabia and these countries, they need to provide, some legitimate outcomes that are for productive labor and for meaningful lives for their young men and their women that they're not providing right now. And until they do that, these countries are going to fall apart. Now, what's interesting is that the world's three largest economies, the United States, China, and Japan, aren't particularly impacted by this. People say, well, what if people don't have an answer for the refugee crisis? Yes, they do. The Americans have an answer. It's not my problem. It's don't take any. And, I see increasingly the Swedes have that answer too. They didn't used to. The Germans might find that answer as well, which means they're going to try to contain this to the Middle East. And that's horrible for all of these people because they're just not going to have anything productive to do.